Now, traders say the reaction to the last Nigerian treasury bills auction indicates that there will be a sustained bullish bias for equities in the coming weeks. Seun Ameye, a fixed income trader at CITI Nigeria, joins me to discuss these sentiments. Of course, sentiments driving Nigeria's fixed income and FX market. Seun, thank you for joining us. Let's get right to it. I'd like us to start with the FX market. We saw the Naira weakening sharply yesterday at the INE window. Bring us up to speed on that drop that we saw and also how the Naira traded against the dollar today.
Well, the drop that we saw, I wouldn't say sharp, but definitely higher than what we've seen in the past few days. I would just see maybe like a very small percentage, but we saw like a 1.8% drop. It's not sharp, but compared to what we've seen, we are used to seeing in the past few weeks, this was definitely higher. Traded at about same levels today, from the NASDAQ levels are just about same levels. But really, what's happening is we're seeing some demand, some type of demand just coming up at the moment in the FX market. But really, it was an upward shift in the USD NGL rate, but I wouldn't describe it as sharp. It's just higher than what we have been used to seeing in the past few months or few weeks.
Okay, what can you tell us about this demand? Can we expect it to get even more to get tighter? You said it suddenly came up. So is this something that could continue, or just a one-off incident?
We have to wait and see. Really, my sense is that this is the end of the year. We generally see some demand in the FX market towards this time of the year. Really. So I wasn't really surprised that we saw the rate go up yesterday. Really. So we'll see. I think it's likely to be temporary for now.
Okay, so last note on the Naira. So can we then, if that does continue, if we do, of course, we're in the festive months where we do see that increase in demand, like you just alluded to, does that mean that we should expect the Naira to weaken further at the INE window?
I didn't get the question. If that demand continues?
Yes. Can we then expect the Naira to weaken further at the INE window?
Well, it's going to be a combination of the demand we've seen and the supply we've seen, really. If as these rates inch up slightly and people come to sell FX in the market, we may not see that kind of weakness. But like I said, really, I expect it to be temporary, really. And if we see the yield, the rates going higher, we may see supply coming to the market in trickles or in more volume than we've seen before. So really, we just have to wait and see, But definitely, if there's demand coming to the market and there's not a lot of supply, the rates will keep inching up, like we say.
Okay, we'll keep our eyes on that. Let's move over to the fixed income market. Now, the CBN's NTB auction yesterday, we saw the 360 4-day paper going at a stop rate of 0.15%. I assume that made investors move quickly to the bonds market. Bring us up to speed on how the space played out today.
Well, in the bonds market today, really, we did not see a fallout of the demand from the T-bill auction at the short end of the curve, really. What we saw in the bond market is what we've seen in the past few weeks, some trickles of demand coming for the longer tenor bonds. So demand for 15 to 30-year bonds. And I would not easily connect that to the pent-up demand at the T-bill auction. Typically, those demands tend to come for the shorter dated T-bills, 2 to 3 or 3 to 5 year bonds, really. So I would not say that demand really came into the bond auction. But with this, as usual, we did see investors still trying to buy NTBs for lack of instruments where they can actually invest in the secondary market.
Now, speaking about that, I was going to ask you, for fund managers now, what would you say is the trading strategy or psyche? They have all these funds that they have to deploy, all these idle funds they have to deploy at the market. How are their trading strategies evolving?
Well, what we're definitely seeing is that, yields have gone way low. 30-year bonds trading around 6.9 to 6.85 levels, really. what we see is that because of the fact that it's close to the year end, investors are just picking bonds as they can in the secondary market. They are not really demanding aggressively like we saw in Q3. So really, they are not really demanding bonds as much like we saw in Q3 in the secondary market. They are picking their level. So it's kind of like cautious trading for now from investors, especially in the bond market.